Welcome to Construction Audit Blueprint, a construction risk management video series. In a series of short videos from Baker Tilly's Construction Risk Advisory Team, we'll be walking you through a variety of topics that you should consider when managing the risk on your construction projects. The topic of our video today is labor rate analysis. You might be wondering if labor rate analysis is relevant to you, and if your organization is participating in construction, the answer is yes. We'll cover what labor burden is, why labor rate audits are necessary, and of course, how to actually analyze these rates. To give some context to what we're talking about today, let's define the two primary employee costs, labor rates and labor burden. A labor rate is an employee's unadjusted pay or compensation without any additions. Labor burden is the cost that's added to the labor rate to cover the employer's additional cost of fringe benefits and payroll taxes. Examples of some common components of labor burden are health insurance, unemployment taxes, and vacation time. Because labor accounts for a large share of the overall construction costs on a project, seemingly small errors in computing labor rates and burden can result in significant overstatements. As an example, let's take a $25 million project. If our project has an average labor rate, including the base rate and burden, of $75 an hour, and the project is going to take about 133,000 labor hours, our estimated labor budget would be just short of $10 million. If this $75 rate was overstated by just $5, we'd be looking at an overstatement of labor cost by over $600,000 once the project is complete. We use that simple example to demonstrate why it's important to take the time up front to ensure your labor rates and burden are calculated accurately. As auditors, we look for red flags or high-risk terms when planning our construction audits, and that's also how we determine if a labor rate audit is necessary. When you're reading through your construction contract, you should be looking for high-risk items that need to be investigated. The first and most obvious thing to be looking for is a term that states that labor rates may not be audited. This should never be agreed to, and if the contract hasn't been signed, we recommend striking this term and doing a detailed review of the labor rates. Other things you should be looking for in your contract are, how will labor rates be billed? If it states that they'll be billed at actual cost, how is that cost defined? Additional labor-related terms that elevate risk are the inclusion of incentive compensation, off-site personnel, and home office costs. These are normally considered overhead costs and should be excluded from the labor burden. Lastly, check your contract for defined billing rates, typically found in a supplemental schedule at the end of your contract documents. The absence of a billing rate schedule should immediately tell the auditor that a labor rate audit is necessary in order to prevent misunderstandings around the rates to be billed on the project. Once you've determined that you need to do a labor rate analysis, you'll collect a rate schedule and a burden breakdown from your contractor if you don't have these already. You want to break down all of the components on a spreadsheet in order to analyze each one and benchmark them against your recalculated rates. Starting our analysis with the base wage, you want to make sure you have a clear understanding of how this rate was calculated. This rate is calculated most simply by taking the annual salary and dividing by 2,080 hours. If it's based on fewer hours, the rate will be inflated to account for vacation time. While either method is acceptable, you want to make sure that you know which one was used so you can properly review your labor burden and billings. Here's an example of what that test looks like. On the left, we have our rate based on 2,080 hours, and on the right, we have our rate based on only the direct hours for the year. You can see that our hourly rate based on the total hours is lower, and if the employee was billed to the project for 100% of their direct hours, the contractor would only recover around $103,000. For this reason, the contractor can either include the extra cost for PTO in their labor burden, or they can bill for the hours for that throughout the year, but not both. On the right, we show the rate based on only the direct portion of the annual hours. As you can see, this rate is higher, and when multiplied by the direct annual hours, the contractor would recover all of the salary cost. For that reason, the contractor cannot bill the benefit hours throughout the year as they're incurred or include the cost as part of the labor burden. So when we look at the rate that we're analyzing, we can see that the contractor has based the rate on 2,080 hours to arrive at $55.29 per hour, and we have it noted that they do not bill the benefit hours directly to the project. So leaving that incremental $6.41 in the burden is appropriate. If you're trying to determine general reasonableness for base wages, don't be afraid to look at local union contracts or go out online to RS Means to find what the going rate is for the different labor classifications in your area. This can help provide you with some level of assurance that the information you've been given is acceptable for the market that you're in. Once you've determined that your base wage is appropriate and you're aware of any adjustments that need to be made to the PTO and your burden, you can move on to the next section. When you look at your benefit costs, you should be able to do a high-level review right away that identifies any obvious non-allowables. Discretionary costs like bonuses and profit sharing should be removed and determined on a case-by-case basis as you think they've been earned. Leaving costs like this in your labor burden will have you paying a portion of these costs in every labor billing, regardless of performance on the job and if the contractor actually pays a bonus out to the employees. Home office and general overhead allocations like this data processing cost should also be taken out, as the labor rates are meant to be representative of the direct project costs rather than a mechanism by which the contractor can recover some of their general expenses. We can see here in our example that most of these other costs appear to be actual allowable direct costs of employing an individual on your project. If you want to check any of these benefit costs for reasonableness, take the hourly rate and multiply it by the annual direct hours figure that you're working with, and use your judgment to determine if you think this number looks appropriate. If you see anything that looks unreasonably high, you should talk to your contractor about how they arrived at this number and request the backup that supports their calculation. The main thing to be concerned about with the insurance included in your rates is where else insurance is billed in your project. At a high level, you just want to make sure that the insurance included in the rate is not duplicated elsewhere in the billings. In the final section of our burden, we have all of the payroll taxes listed out. Aside from ensuring that you're using the correct percentages for the applicable state and federal taxes, you want to pay special attention to the taxes that have caps on how much of the wages are taxed. For example, federal unemployment tax only applies to the first $7,000 of wages in a year. So if we consistently apply the stated percentage to the entire annual salary, we'll very quickly start accruing overcharges. In order to avoid this, you need to adjust the amount applied in the per hour rate so that only the actual annual tax liability for each employee is recovered. As we can see here at the bottom, just from this quick analysis we've gone over, our labor burden has been reduced from 79% to 48%. When we look at that in terms of dollars, that amounts to an overcharge of over $30,000 per year just for this one employee. There's, of course, also additional scrutiny that could be given to some of the costs that we didn't go over today that might change this number even more. So don't feel like you should be limited to just the specific examples that we touched on today. It's important to remember while you're doing your analysis that this is not going to be perfect, and the objective is not to come up with amounts that are completely accurate down to the penny. What you really want to get out of this is confidence that the rates you're paying on your project are reasonable, allowable costs that you're comfortable with.
Thank you for watching. Visit Baker Tilly's Construction Audit Resource Center today to download our sample checklists that meet the needs and risk mitigation goals of a construction project and sample templates to help you standardize the collection and reporting of information for project audits.